What's up, everybody? Welcome to the Blockgen channel. The purpose of this channel is to start discussions on relevant topics that are current events or future or potential future events in the blockchain cryptocurrency sphere. Nothing that I say on this channel should be construed as investment advice. And so today I want to talk about Tether and the Tether token. And the reason I want to talk about Tether is there have been some articles written recently by bloggers that have now been picked up by some larger news organizations like Bloomberg and Seeking Alpha. And the articles essentially are alleging that Tether is a fraud. And so I wanted to look into this a little bit more and discuss what the facts are, what the allegations are, and what the potential implications may be. So what is Tether? So Tether is it's a digital token that is available on most cryptocurrency exchanges. It's also available directly from Tether at tether.to. The use case is that it's a stable currency that you can use to get out of Bitcoin when volatility spikes, for corrections, to preserve capital, things like that. And I personally have used it for that purpose myself. I have not used it the last few weeks for fear that my tethers would be not redeemable, and I will get into that in a minute. So Tether claims that every Tether token is backed by $1 in reserve somewhere presumably in a bank account. So what are the current facts? First of all, the first thing that's relatively fishy about Tether is that the market cap in January was $10 million, and it had been pretty stable for a few years around that level. And today the market cap is over $815 million. And Wells Fargo terminated their banking relationship with Tether back in April of this year, of 2017. And Tether filed a suit but then dropped it a couple days later. And then Tether stated that their banking problems were expected to preclude them from increasing the supply of tethers. At the time, the supply of tethers was 60 million US. And obviously, their banking problems have not prevented them from issuing new tethers, because they're at more than 10 times that amount today. The thing that makes this even more fishy is that they haven't identified any new banking relationship. And why not? Why haven't they done that? Well, there are some potentially legitimate explanations for that. I mean, since they had their prior relationship terminated by Wells Fargo, they could be concerned about too much attention and the possibility of having something like that happen again. There's the possibility that they have to use sort of other corporate entities to trick the banks into holding their funds, holding companies and the like, so that they don't get terminated again. But what makes this more suspect is, where did that $800 million come from that they've added this year? And they've never released any audited financials. They claim to be undergoing an audit back in 2016 after they were hacked for the first time, but they later backtracked and said that the audit was of their security protocols, not of their financials. And you go to the Tether website and you scroll down to the legal section, and you scroll down to item 3. It states, "There is no contractual right or other right or legal claim against us to redeem or exchange your tethers for money. We do not guarantee any right of redemption or exchange of tethers by us for money." So if the whole idea is that there is US dollar reserves for each tether, the idea is that you can be assured that you are going to be able to redeem your tether token for $1. That's the entire purpose of the token. But Tether is essentially disclaiming that they can choose whether or not to honor your tokens, whether or not to actually exchange tokens with you. And there have been a few reports of people who have been denied the exchange of their tethers for fiat. Now, you can obviously currently still use your tethers and transfer them use them to buy Bitcoin or Ethereum or the like, and then transfer them from wherever exchange you trade to an exchange that allows fiat and cash out that way. But if you want to go directly from US dollar tether to dollars, then there's very limited liquidity. Bitfinex and Kraken are the only exchanges that have that pair, the direct tether US dollar pair. And Bitfinex is related to Tether. So if there is an issue, the only place to go really is Kraken. So what are the potential problems? The most significant possibility for our purposes is that tethers are not backed by fiat, that Tether issues tethers whenever they want, and that they use those tethers to buy Bitcoin and then hold or sell that Bitcoin for US dollars or other fiat currencies. Another possibility is that even if they are backed by fiat, the tethers might not be redeemable. And that could become a big issue in the case that exchanges decide that they are not going to do tether pairs anymore for one reason or another. And if that happens, then you have anyone holding tethers is holding a bag. And another possibility is that, or implication of this, is that the crypto market cap has been inflated by what is essentially $815 million or something like that of counterfeit currency. And so there could potentially be some negative implications to the overall crypto market cap or Bitcoin. And another implication is that if Tether does become or is found to be insolvent, the only way to step aside from positions in cryptocurrencies in a major crash or correction is to go to actual fiat. And since there's only a few fiat exchanges, then that creates a massive bottleneck in the ability of people to sell, and with increased volume in a crash, that it could be chaos. So what are the possible results? Best case scenario, Tether actually is backed by fiat, but they just have to protect their banking relationships to allow them to continue to do business. Another possible outcome is that Tether is not backed by fiat, that gets exposed, that exchanges halt Tether trading, and that leaves Tether holders holding a bag of $18 million worth of worthless tokens. If that's not bad enough, there's a possibility that would cause Bitcoin to crash in a major way, like a Mt. Gox style crash, because of a loss of confidence in the ecosystem. And selling would be compounded by the fact that Tether wouldn't be able to be used. People would have to move to just a few exchanges, and likely those exchanges would go down. And like I said, that would be potentially chaotic. And an alternative possibility is that even if this is revealed to be the true, that Tether is not actually backed by anything, that it's just been essentially counterfeited, Bitcoin takes a minor hit, but not a major one, because in the grand scheme of things, the Bitcoin market cap is over $200 billion, and the crypto market cap is obviously even larger than that. And so the the amount of, the $800 million worth of tethers, which sounds like a lot of money and is a lot of money, is not anything really. It's a fraction of the total market cap of the cryptocurrency sphere. So at least from a dollar standpoint, the potential is for a less severe correction as well, and that is a possibility. So, the reason I brought this up is just to let people get an idea of a potential problem, a potential black swan that we didn't see coming, and to encourage you to create a contingency plan in the case that you're not able to use Tether. And also, to do your own research and see whether you think that these allegations are true or not. If they are true, that could cause major problems, and we're all in this thing together. I think one of the great things about the cryptocurrency and blockchain sphere is just the way that the community works together. I just wanted to bring this to the community's attention and start a discussion. So if you have questions or comments, please comment below. And if you found this helpful, please like and subscribe to the channel. Until next time, this is the Blockgen channel signing off.